Right, let's now move on to our next question, which is question 2.4, and I'm going to read from the question itself, from the actual required. So let's just read through this bit here. It's quite a long question, so I'm going to read through everything. The owner and the accountant disagree on the method of stock valuation. Sizwe wants to continue using the FIFO method. So remember, Sizwe is the owner because it is easier to calculate. The accountant, Bali, wants to use the weighted average method because she says the profit will be lower and therefore the income tax will be lower. As the internal auditor, how would you respond to the owner and the accountant's comments? State 2 points. Okay, so we've got the owner Sizwe, we've got the accountant Bali. The owner wants to change the stock valuation method because he feels that he wants to use, let's start over. So Sizwe is the owner. He wants to continue using the FIFO method because it's easier to calculate. And then we've got the accountant Bali who wants to use the weighted average method because she says that the profit will be lower and therefore the income tax will be lower. Now, as the internal auditor, how would you respond to these comments? So let's start off firstly with the owner. Now, the owner wants to continue using the weighted average method because he says it's easier to use, or the FIFO method, it's easier to use. Now, remember guys, when a business selects their stock valuation method, it's not based on whether it's easy, whether it's difficult. It depends on the type of product that they're selling. So in this particular case, you're selling laptops. The value of laptops are quite high. And remember, the model of a laptop changes from time to time. So the most suited method of stock valuation for this type of product would be the FIFO method, where obviously you're using the cost price for that particular purchase for that product. Right, now looking at the accountant's comments, the accountant wants to change the stock valuation to the weighted average because she believes that if they are able to forecast a lower profit, it means that they end up paying lower tax or less tax. Now again, looking at the accountant's comments, you're going to say, hang on, that's not correct, or not correct, but that is illegal. You're not allowed to do that. That is something unethical. So remember, you cannot change your stock valuation methods to manipulate profits, to pay less tax, because that is completely unethical. Also, if you change your stock valuation methods, you've got to declare this. You've got to get permission from SARS. You can't just go about changing your stock valuation methods to pay less tax. Okay, right. So as the internal auditor, you will make the following points to the owner and the accountant. FIFO is more appropriate. Okay, think back to what I said earlier on, based on the type of product. Laptops are expensive and the model changes. Okay, so that is why FIFO is more suited, it's more appropriate. It's more suited to attach the cost price paid to this type of stock. Hence, your FIFO method is definitely a better method to use. You should not manipulate profits to pay less tax because this is unethical. And also remember, keep existing method to ensure comparability. So remember, financial statements need to be compared from one year to the next. So you're always comparing previous year to current year. So in this way, you would be using the FIFO method, right? And let's say you now change to the weighted average method of stock valuation. You are unable to then do that comparison between your profits, between your expenses, and so on. So remember, you would keep the existing method in order to ensure that that comparison can be done. And also remember, you can mention that if you do change the stock valuation method, you've got to have a very valid reason to do so. You can't just go about changing the stock valuation method. You've got a valid reason, you've got to declare this, or you've got to inform SARS, you've got to get permission from SARS before you change your stock valuation method. Okay, right, let's now move on to the second part of the question. So still on the same scenario. Is the accountant's statement true? Substantiate with a calculation, and there's lots of marks for this. Right, so remember, according to the accountant, if you change your stock valuation method, you will end up with a lower gross profit. And they want us to show a calculation in order for us to substantiate whether or not the accountant's statement is true. Okay, so let's do a calculation. Right, so according to the accountant, if the business uses, let's just go back a bit, I think it's further down, yeah, there we go. Right, so if the accountant uses the weighted average method, right, using the weighted average method, is closing stock lower? Because remember, if closing stock is lower, that means your profit or your gross profit will be lower. Okay, so that's what we now need to test, whether or not this is true. Right, so looking at the weighted average method, so once again, units unsold. So my units that were unsold, I'm going to now multiply this by a weighted average price. Okay, so units unsold, we did calculate that earlier on. So let's go back to our very first answer, right? So units that were unsold, 235 units. So let's just take that through. Okay, units unsold, there we go. Right, so 235, and now let's calculate our weighted average price. So weighted average price, guys, not difficult to calculate. All you've got to do is calculate the value of stock available. So you're calculating the value of stock available divided by number of units available. I'm just glancing at the time there, and I see we still have time, so that's fantastic. Right, so let's do this calculation. It's a bit of a long calculation, but it's not difficult. So units or value of stock available divided by number of units available. So let's start off with value of stock available. So for this, we're going to first start off with opening stock. So if we go back to our table, which I should have repeated, yeah, we have. So our opening stock value, 240,000. Okay, so opening stock value, 240,000. And to this, we are going to add purchases. Okay, so we're going to add our total purchases. So again, we're going to have to just quickly go to our table. So our total purchases, an amount of 2,606,000. Okay, 2,606,000. Right, we will also then add our carriage on purchases. So your carriage, remember we did calculate the carriage earlier on. So carriage and purchases, if we go back to our table, so carriage and purchases, remember we had 35 units and we purchased 630 units times 630. Okay, so let's just quickly do that one more time. So 35 times 630 units, and our carriage and purchase 22,050. So carriage and purchase, we're going to add that on. So plus an amount of 22,050, and then finally you need to subtract returns. Okay, you've got a minus returns. So remember, our returns were the 5 laptops that we had returned. Okay, so there were 5 laptops that were returned, and it was from the month of February. So 5 times 4,200, right? And that gave us an amount, if I remember, it was 21,000. Okay, I'm not going to redo that calculation. It was 21,000. Okay, so minus 21,000. Right, as you can see, it's quite a long calculation. Right, so I've done value of stock available, and now let's look at number of units available. So let's look at the second part of the calculation. So number of units available, again, you're going to start off with opening stock, but how many units were on hand at the beginning of the year? So again, if we go back to our table, again, we calculated this earlier on, guys, the number of units that were on hand. Remember, 240,000, let's go to a table that you can see, 240,000 divided by 4,000, and I think there were 60 units on hand. I'm just going to quickly double check that and just make sure. So 240,000 divided by 4,000, and number of units at the beginning of the year was 60. So 60 units on hand. So let's fill that in. Okay, so number of units, we've got 60 units. Let's extend the page now, right? And to this, we're going to add number of units that were purchased. So the units that were purchased, we're going to add minus units that were returned. Okay, so back to the table. Units that were purchased, 630 units. That was obviously purchased. Number of units purchased, and the units that were returned were 5 units. Okay, so plus 630 minus 5. Okay, I know I'm going back and forth, but hopefully you guys are following. Plus 630 minus 5. Right, so now we're ready to calculate our weighted average price. Okay, so we're going to start at the top. Okay, so at the top we've got 240,000. Okay, plus 2,606,000. Okay, plus 22,000. There's too many twos there. Let's try to quickly cancel that. So 22,050. Okay, and minus 21,000, and that gives us an amount of 2,847,050. So I just want to write that quickly. It's an amount of 2,847,050, and we're dividing this by the bottom. So we've obviously got 60 units plus 630 units minus the 5 units, and that gives us 685, and our weighted average price, an amount of, so 2,847,050, let's see if I'm right there, divided by 685, and that gives us an amount of, okay, 4,156 Rand 28 cents. Okay, so 4,157 Rand, and try and keep the cents, guys. So it was 4,156 Rand 28 cents. So 56 Rand 28 cents. As you can see, quite a long calculation. I know took a bit of time for us to do this, but remember guys, this is important. And remember, once you now get the weighted average price, you can now take this amount and multiply it by the 235. So times 4156,28, and that will give us our closing stock using the weighted average method. Okay, so one more time, let's just get the calculator. Oh dear, just try and move this and it's not moving. Okay, let's just clear that. Okay, so let's just try 235 times 4156.28. I'm sure you guys already calculated this, and this gives us an amount of, and now you can round off to the nearest rand, 976 rand 726, if I round off to the nearest rand. So 976, okay, 726, okay, and this is my closing stock. Right, so after that really long calculation, what exactly did the question ask? So remember, according to Bali, the accountant, right, if they use the weighted average method, is closing stock lower, and will your gross profit then be lower? So remember, this is obviously according to the weighted average method. Okay, and now if we compare to the first in, first out method. So if we go back to our very first question, when we calculated the closing stock using weighted average method, as you can see, using the weighted or using the first in, first out method, the FIFO method, this was our closing stock value. As you can see, it was obviously much higher. So the accountant is correct in saying, so let's just quickly go back there. The accountant, yes, right, closing stock is lower, right? Closing stock is lower using the weighted average method. Okay, and as a result, because closing stock is lower, gross profit will be lower. And as a result, your tax will be lower. Okay, sure, a very long question, guys, but remember this was 10 marks and it required a calculation and an explanation. Right, I think let's take another quick break, and when we return, I'll continue with the last two questions. I'll see you guys in a bit.